Hello, everybody. I'm Rhea Aoun-Clavel, Event Director of TRUSTECH. Thank you for being with us today. So welcome to a new episode of our CovidCast series, a limited series of podcasts TRUSTECH is launching to discuss how the coronavirus is impacting the payments, identification, and security sectors. In this fortnightly rendezvous, John DEVLIN, Principal Analyst and Founder of P.A.ID Strategies and host of TRUSTECH's Innovation Stage, will share his insights and expertise based on his recent report, The Impact of COVID-19 on Smart Cards and Embedded Security. In this fourth and final podcast, we will explore how COVID-19 has changed people's use and behavior with mobile and digital banking. I'm delighted to welcome John, who will answer my questions regarding the accelerated adoption of mobile and digital banking. Welcome, John. With so much disruption and limitations on people's movements, how do you believe COVID-19 has impacted people's use of mobile and digital banking?
Thank you, Rhea. Yes, I think obviously there has been a clear change in consumer behavior. Mobile and online banking were two of the more popular and successful digital services, along with e-commerce. There's been a clear use case for online banking, although that is limited because it requires good broadband access and PC ownership or installed Wi-Fi for public use or for home use. So there is that consideration, so it hasn't been able to serve everyone, but with mobile, I think that has overcome a lot of those issues. And as smartphone ownership has increased in all countries, mobile banking has developed, and for the past year or two has been more popular, more frequently used than online banking. And COVID-19 has really accelerated this shift and this adoption. I think that we found that many branches have been closed, telephone support and services have been limited because of the disruption with customer call centers and staff being in branches available to show people. So that's further enhanced the usage of mobile in particular. I know that in a survey from TransUnion, which was formerly iOvation, a survey they published found that 90% of consumers pre-COVID were engaged in at least one online banking transaction a month, with the younger generations being the most engaged and most frequently using those services. And the most commonly used remain balance checking, paying a bill, and transferring money between accounts, which is all easily done and commonly done with online and mobile. I think mobile has the advantage in that it offers a little more interaction and flexibility and convenience. And we've seen mobile banking apps evolve over time, going beyond and adding more features to balance checking, bill payment, and money transfers that I mentioned. And we're able to do much more now. And obviously we've seen the rise of digital only or neobanks, which are able to support customers without any physical branches and offer quite a complete range of services. And they are adding to that as well. So there's been a shift or an acceleration in the past 6 months with COVID. And where banks were already reducing their numbers, they were looking to provide more online and mobile support and services for their customers. And this is certainly increased with their closure, or temporary closure, I should say. And this has affected people's consideration and openness to digital channels and boosted the adoption. Some banks have tried to facilitate this by cutting service fees for everyday services that they had in place in some countries. I know that FIS released a report that 45% of people have used mobile banking apps now, and in June this year, the FBI said that mobile banking usage had jumped 50% since the beginning of the year. And in other regions, this is a similar trend. I know in some African countries where transaction fees were either cut or reduced, some banks reported an increase in mobile banking usage of 200% since the start of the pandemic. So there's obvious interest and meeting a demand there with mobile in particular.
Yes, it makes sense that this would happen. Does this rapid growth in mobile and digital banking have a downside?
Yeah, unfortunately it does. The problem, I think, part of the problem is that many banks have not yet adopted a digital first mindset, and COVID-19 has highlighted some of these issues. I saw that PwC reported from a survey that in-person interactions accounted for 68% of how we use bank services. This was at the start of the year, so pre-COVID. So there's still, there's been a large turn in the past 6 months going from face-to-face to digital. And whilst banks have wanted to compete with the neobanks on service and technology and customer experience, they haven't really had to do that. With over 2/3 of people still going in branch. That's globally, so there are country-specific variations, but this I think has now changed for the long term. But to give an example of how banks perhaps haven't adapted yet, we are 6 months in, and this was my business bank actually, and for the first time in over a year, I went into a branch because I had to get them to stamp a letter. They couldn't provide proof of account holding for a new client digitally. I had to go in, but whilst I was there as well, I overheard someone being told that there were no face-to-face appointments in the branch, but they wanted to open an account. So they were told that they could do this with a telephone interview to open the account. But before they could do that, they would have to go home to get some ID to take into the branch, to be able to register for a telephone interview, which they could then open an account or be approved for an account after the telephone interview. But that type of process, it creates problems for the consumer. It's very drawn out. That can take days or weeks, and it seems also backwards when it can be easily done online or in a mobile banking app, but the bank hasn't adapted its processes to be able to support the customers in this way. And they need to take account of all types of customers as well, all ages, cultures, demographics. I can set up a banking app quite quickly, but there are some, I'm going to use the example of my dad actually. It took him nearly 3 hours to set it up. He had to get 2 calls to customer support. His bank required the online banking registration before the mobile app could be activated, but he only wanted mobile banking, and so it made it much more awkward and troublesome than it should have been. And I think that's so for a lot of people now that are using mobile and digital online banking for the first time. And banks need to adapt their experiences to consider the customer experience and the interface for all types of users to make it as simple and seamless as possible. I think another clear potential issue is continuity of service. I mean, that's nothing new, but with access to bank branches being much more limited, any disruption to the digital channels is much more significant, and that can have much more of an impact. And there was an example this week with NatWest in the UK where their online, mobile and telephone banking services were all down, luckily only for a few hours. And I recognise that bank branches aren't 24 hours, so there's limited personal interaction as well available. But I think that as more people go digital, disruption to those services can affect the bank's image and potentially the trust in digital banking much more. And obviously fraud is a much bigger issue with more people going digital. I think the risk increases a lot with more users that are less used to mobile and online channels. I've seen recently that both Interpol and the FBI have reported a big increase in hacks and phishing scams. I think the FBI said at one point they've been receiving lately as many as more than 4,000 calls a day reporting scams and security hacks. So I think that highlights the issue, and with people less familiar and with people coping with more disruption to their lives, they could be more vulnerable to scams, particularly those that are using COVID-19 and sort of financial support that's being offered from companies and governments. They may be less, or people may be more open to these scams without realizing it. And so that risk needs to be carefully managed. But there are ways of doing this. I think security measures like two-factor authentication can be added to both online and mobile. But the process needs to be clearly and easily understood for all types of customers. Mobile has the advantage of additional reminders and alerts can be provided by the bank. They can highlight for new recipients being set up, for failed attempts or unrecognized attempts at access to accounts. Biometrics in mobile is a relatively straightforward practice and could be added in as well for consumers who are comfortable with fingerprint or facial recognition or even voice authentication as well. But I think if it's mandated by the banks, then there could be some reluctance from customers who are either less comfortable sharing their biometric data. And I think that the final point I probably would say is that banks should be careful to remind consumers about best practice and maybe not always storing their card details with merchants or in browsers for convenient access, because it's not always best, and it does increase the risk.
Given all these changes, John, what do you believe is the long-term outlook in terms of usage and market development?
Yeah, I think certainly, I think clearly at P.A.ID Strategies, we believe that a lot of customer behaviour has changed for the long term as a result of COVID-19. When normal access to branches is resumed, I think that some customers will go back to that because they have a preference for personal service and interaction. But banks can do a lot of that with the digital channels. But many of us won't reverse our new habits and behaviour and how we use and access banking services. In that FIS survey I referenced earlier, it said that more than 45% of consumers have said they have permanently changed how they will interact with their banks since COVID-19. 31% of consumers will continue to use more online and mobile banking more frequently as well. And I think there's already a measurable shift away from cash and checks. So banks need to be aware of this and change their approach. Unfortunately, perhaps I saw a survey that, an industry survey that said that of banking executives that said that their digital strategy was primarily to reduce costs. I think it was around between 30% of executives said that, whereas it was under 24% said that the digital strategy was to improve the customer service and experience. And that should be, banks should be aware of that, because I saw someone from JP Morgan Chase said that 57% of millennials will switch banks to get a better digital experience. And so we could find banks are losing customers if if their online and mobile channels are more about themselves than about the customer. But there are ways of doing this. I think physical branches aren't going to go away. There's clearly a role for them, but they should be used in parallel with well-designed mobile and digital services to ensure that banks support all of their customers with trusted and secure financial service. I think particularly looking at banking apps as well as online, there's definitely going to be an evolution, and we will see new features added to them. Currently, banks tend to test a new service with a standalone app, but I think we'll see those being integrated into the primary digital app as those capabilities are proven. But I think other things as well, like I think we'll see video chat for customer service and higher level services being introduced into mobile apps. There's no reason why that wouldn't happen. I think already we're seeing more digital identity, verification, authentication being integrated into the apps and online services to increase security and reassure customers as well that the services are secure and trusted. And this will encompass biometrics and two-factor authentication. I think that we'll see some new things like enabling and ordering access to cash with interaction between smartphones and ATMs to reduce, to provide more touchless services. We'll see more SMS and chatbot services being introduced into the apps. Check scanning has been with a smartphone for deposit has been available for a while, but some banks have been slow to do that, and I've seen more around that area. And just as a general comment, I think that more AI will be included for customer service as well as fraud detection.
Thank you so much, John, for this fascinating insight. We hope you enjoyed this limited series called COVIDcast with John DEVLIN, and we hope you have a wonderful day.